Hey, today is January 9th, and I just want to talk about a stock in my portfolio, and that is Luminar Technologies. Ticker symbol is LAZR. It closed at $32.99 on Friday. If we look past 3 months, we see it's trading between $30 and $35. It's having a hard time breaking that $35 resistance. And I think once we do, we can try to break the $40 again and go all the way up to all-time high, which is $47.80. Just wanted to give you some background on who founded Luminar and what Luminar is. Luminar, which creates LiDAR technology critical to many automakers' autonomous driving efforts, went public through a special purpose acquisition, also known as SPAC, and the deal will make Luminar co-founder and the CEO, Austin Russell, a billionaire, and he's only 25 years old. Russell founded the company as a 17-year-old student. The Luminar CEO said it also follows the plan his company has had in mind since founding. They said, "We have set up the company to be a long-term, sustainable business and the power future of autonomy for all of these automakers. We are in it for the long term." CEO Russell was a bit of a science prodigy. He said, "I guess I didn't memorize the periodic table. I think I was around 2 or so. I was just obsessed with learning certain things, just independently learning and understanding a lot of new types of scientific fields, among other things. And that evolved into work on lasers, ultimately LiDAR, which uses lasers to detect and measure distance and ultimately create a 3D map of the real-world environment that can be used in self-driving." It says he ended up at Stanford University studying physics, but dropped out and received a Thiel Fellowship, which was created by tech icon and PayPal co-founder Peter Thiel to provide tech talent with alternatives to traditional educational programs. He said the company has a forward-looking book of auto businesses at $1.3 billion and estimates an overall market opportunity within the multi-trillion auto market at $500 billion as LiDAR and autonomous vehicles comes to focus for the auto industry. It's always good to have a little bit of a background of the CEO and how he came about with this company. So there was news last month, and it says Mobileye and Luminar Drive will collaborate full speed ahead. The global leader in automotive LiDAR hardware and software technology, and Mobileye, an Intel company and the global leader in assisted driving technology, clarified details of the deal they had announced on November 20th, 2020, following nearly 2 years of working together at the development stage. Luminar is providing its technology to Mobileye for its autonomous vehicle series solution. Luminar's technology will be used to enable Mobileye's true redundancy capability with multiple self-contained sensor systems to enable uncompromised safety and validation for level 4 autonomous driving. Luminar is the first and only company that meets the stringent performance, safety, and economic requirements for autonomous production vehicles and is proud to count Mobileye as a cornerstone launch program for Luminar, stated Austin Russell. "It takes intense dedication on all sides to see a significant and bold program through, and the collaboration is only accelerating as we begin our work on the production solution and get closer to launch." Luminar has over 50 commercial partners, including 7 of the world's 10 automakers, and has been backed by more than a dozen top-tier investors. I do see a lot of potential in this company because autonomous driving is the future. I do have 2 cash secure puts if we look at that. So they both expire on the 15th. One is for a 30 strike price and the other one is a 35 strike price. For those, I collected $271 for the first one and then $500 for the 35 strike price. And I actually sold the 35 cash secure puts a month ago, so I was able to collect bigger premium. So the current price is at $32.99. If that price stays above my 30 strike price, that contract will expire worthless. But if it's below the 35, I would have to buy 100 shares at $35. If I don't want to buy 100 shares at $35 because the price is lower than that strike price, I would just roll it over to the following week. So let's just take an example. If I were to create a rolling order to 22nd of January with the same strike price, I would receive $163 on top of the $500 I already received. So that's the beauty of selling options. Selling options, I get to keep the premium no matter what, and I get to keep the premium up front. So with buying calls and buying puts, you actually have to pay the premium up front instead of receiving it. If you're thinking about starting a position with Lazr, you can also think about selling a cash secure puts. And we look at the volatility, the IV, it's 137.49%. So anything above 100% is good because you will receive a higher premium. So I always look for that. So let's say you want to sell a cash secure put on Monday with a weekly expiration date, and that expires on the 15th of January. We go scroll down, and let's say you want to buy it. You don't mind owning 100 shares at the same strike price that I have, which is 30. We go in here and it says you'll collect $105. You'll also pay a small fee to your broker. So for Thinkorswim by TD Ameritrade, I have to pay 65 cents for every transaction, every option transaction I do. Let's say you want to wait until it dips lower, you can do that. So with a 28 strike price, you can get $50 just by waiting until the stock price reaches your strike price. So let's say it doesn't reach it, you collect that $50 and you can just do another cash secure puts the following week. But let's say you want to do a monthly to receive a bigger premium. You can go to the February 19, and let's say you want to do the 30 strike price, you will collect $470. So the further out you go, the more premiums you will get because there's more uncertainty. I like to do weeklies because I have more control, or even monthlies. Because I did with Lazr, I did it with monthly because I am bullish on the stock and I believe it's going to go up. So if you were to do a 17 December cash secure puts for a 30 strike price, let's just take a look at that. You'll receive $1,159, and all you have to put is 30 times 100, which is $3,000. All you have to do is put up $3,000 to collect $1,159. So you need to have enough money to buy 100 shares at your strike price. This is a really good deal because if you're bullish on the stock, you can do this for a year out. And for your break even, it's around $2,000. Even if the stock goes down to $20, you'll still break even on this because you collected $1,159. That's what I like about secure puts and also selling cover calls, because there's less risk in that versus buying calls. Buying calls, you have to really predict where the price is going. I will tell you a story. I've lost already a lot of money during buying calls, and yet I still haven't learned my lesson. I have currently 7 Zoom calls that I am down over $12,000 already. It's crazy, and it expires in February. I mean, $12,000 is a lot of money, and I could have just used that to sell some cash secure puts on Lazr for a December strike price and collect $1,000. I mean, the only downside of selling cash secure puts is if the company goes bankrupt, and obviously you would lose everything. But that's why you have to do it on a company that you don't mind holding stocks on. So with Lazr, if we know Lazr is going to be big because autonomous driving. Before I let you go, I just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. Just want to thank you all for watching, and please don't forget to like and subscribe if you found any value in this video. Thanks again.